Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. Now with that disclaimer out of our way, let's get started. In today's video, I'm going to talk about 3 growth stocks that have the potential to grow faster than its peers and the market in 2025. As we look ahead to 2025 and beyond, the stock market continues to offer numerous opportunities for investors, particularly in the growth sector. Growth stocks are companies that are expected to grow at above average rate compared to other companies in the market and have long been a key focus for those seeking substantial returns. With advancements in technology, evolving consumer trends, and changing global dynamics, some stocks are poised for explosive growth. Keeping that in mind, we will look at 3 growth stocks today that have the potential to outperform the market in 2025. These stocks offer exciting potential for investors ready to capitalize on emerging trends and innovations. Please note that we have filtered these stocks after putting in parameters such as return on equity above 20%, sales growth above 20%, and they should trade at a PE below 25. So let's get started. First on the list is KNR Constructions. KNR Constructions Limited, incorporated in 1995, is a Hyderabad-based infrastructure project development company providing EPC services in segments such as roads and highways, irrigation and urban water infrastructure management. The services of the company include construction of roads, highways, bridges and flyovers on EPC, BOT and hybrid annuity model basis. It also undertakes irrigation projects, urban water infrastructure management, and agriculture projects. Some of its customers include National Highways Authority of India, Ministry of Road Transport and Highways, Government of Telangana, Karnataka State Highway Improvement Project, Madhya Pradesh Road Development Corporation Limited, etc. The company has executed more than 8,700 lane kilometers of road projects till date. It has a track record for execution of projects before the scheduled time and receipt of early completion bonuses from the relevant authorities. KNR has a large fleet of world-class construction equipment. It has 1,287 tippers and tankers, 402 excavators, 289 generators, 48 rollers, among other equipments. Coming to its financials, KNR Constructions reported a 45.1% growth in its revenues in first half of financial year 25. However, profit after tax grew by 182% due to an improvement in EBITDA margins from 22.2% in first half of financial year 24 to 39.2% in first half of financial year 25 and higher other income. Going ahead, the management expects significant project inflows in quarter 4 of financial year 25 post-elections. The company is confident about future order inflows with a strong bidding pipeline. The stock price has returned 8% over the past 1 year, while in the last month it is down by 15%. The second stock on our list is Motilal Oswal. Motilal Oswal Financial Services Limited was founded in 1987, is a well-diversified financial services firm. Motilal Oswal is among the top 3 brokers in terms of gross brokerage generated. The company has a network spread in 550 plus cities and towns comprising 2,500 plus business locations operated by their business partners and over 1.6 million customers. The company provides financial services in 3 categories: capital markets, asset and wealth management, and housing finance. The company derives 71% of its revenues from capital markets, of which 54% is from brokerage, 18% from wealth and asset management, and the balance 11% from housing finance. Designed to empower modern investors, this innovative tool lines up recommended sectors and stocks with just a snap, backed by Motilal Oswal's renowned research expertise. Coming to the financials, the company reported a robust growth of 64.9% in its consolidated revenues, along with strong EBITDA growth coming in at 84.1% in first half of financial year 25. EBITDA margins improved to come in at 62.6% versus 56.9% in the previous year. Going ahead, management expresses optimism about continued strong performance across all segments, with expectations for best-in-class earnings growth and return ratios without dilution. The company currently trades at 11.9 times its trailing 12 months earnings per share as against a 10-year median PE ratio of 21.2 times. The stock has returned 53% over the past 1 year due to strong operational performance, but in the last month it is down 29.7%. The last stock on this list is India Glycols. Established in 1988, India Glycols Limited is engaged in the manufacturing of green technology-based bulk chemicals, specialty and performance chemicals, and natural gums, spirits, industrial gases, sugar, and nutraceuticals. The company has two business segments: bio-based specialties and performance chemicals, which contributes 64% of revenues, and potable spirits, which contribute 35% of revenues. Geographically, India Glycols derives 91% of its revenues from India, whereas exports contribute to 9% of total revenues. The company has 3 manufacturing facilities at Gorakhpur, Kashipur, and Dehradun. The capacities are grain-based distillery plant at Gorakhpur, 110 kiloliters per day, biofuel ethanol plant at Gorakhpur, 100 kiloliters per day, and biofuel ethanol plant at Kashipur, 140 kiloliters per day. All these facilities are running at 100% capacity utilization. Coming to the financials, India Glycols reported a growth of 17.6% in its revenues for first half of financial year 25, and profit after tax grew by 7.7% for the quarter. EBITDA margins improved from 5.2% in first half of financial year 24 to 5.5% in first half of financial year 25. Going ahead, management is focused on premiumization in the liquor segment and enhancing operational efficiencies to improve margins. The management is also confident in maintaining and improving run rates in biofuels and specialty chemicals. Shares of India Glycols Limited are down 34.6% in the last 1 year. However, the stock is down about 3.7% in the past 1 month. So there you go. These were some of the growth stocks that you could watch out for in 2025. In conclusion, as we look ahead to 2025 and beyond, the growth stocks discussed in this video represent companies that are well positioned to capitalize on emerging trends and opportunities across diverse industries. Whether it's infrastructure development, financial services, or sustainable chemical production, each of these companies demonstrates strong fundamentals, impressive financial growth, and promising outlook for the future. While the stock market is always subject to volatility, these companies show significant potential to outperform, making them compelling candidates for any investor's watch list. By staying informed and acting strategically, investors have the opportunity to benefit from the remarkable growth prospects these companies offer in the years to come. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. For more details on the story, check out the full coverage with the link provided in the description below. This is Zil from Equitymaster. Thanks for tuning in.